Here's Bill's question.
My name is Bill. I'm 70 from Little Rock. My question is, do you consider real estate investment trust funds a good item to have in your portfolio? And if so, what sort of percentage? Thanks for your time.
And thank you, Bill, for the question. So we're going to dive into real estate investment trust talk in this part of the Get Ready for the Future show. And I think it's a great topic to discuss from a high-level view for sure. Now, certainly we are not going to be able to tell Bill his specific investment recommendation over the air. But when you think about a diversified portfolio, Janet, and we talk about on the show quite often about how it is generally thought of as stocks and bonds. That basically you get an asset allocation mix of 60-40 in retirement, and you're just going to rock along. Well, we saw in 2022 particularly how rocky that ride can be when bonds perform much more like equities, and they both went down severely.
Yeah, people thought that bonds were a safe place to go, and they wound up not being because of the impact that they saw from interest rate changes. So we really want to take this question from an educational standpoint and help you understand what a real estate investment trust is. Obviously, Bill, who called in with this question, has a little bit of a foundation of knowledge on this already. Let's talk to our other listeners who may not even know what that is, and then we'll get to Bill's specifics here. I'm going to use Amazon as an example. There's a lot of other companies that we could talk about, but that's one that, pretty much everybody's getting Amazon boxes on their doorstep, so you know who Amazon is. If you think about them in different ways, you could invest, I'm not telling you to do this, but you could invest in Amazon stock. You could buy their stock, and it's going to fluctuate based on the value of those shares. What you have invested is going to change. And so if the market, as we often collectively say, if the market goes down, because Amazon is part of the collective market, it's probably going down too. If something bad happens, everything there is going down to some degree. But what you want to look at is what other type of way could you be sort of, paying attention to what Amazon is doing and go, okay, what other aspects of business are there? Well, they have all these distribution centers, but here's the key. They don't own those buildings where all their stuff is stored. They are renting those buildings. And so they are held in what is called a real estate investment trust. And you could own shares of that trust, and that trust has lots of different buildings, not just an Amazon distribution center, and different types of buildings as well. And the rent that comes in off of those properties is considered a distribution. Now, that could go directly to you when it comes in, or it could be reinvested. Scott, when we use these, we're reinvesting that for people, but we want investors to understand that distribution rate is not something that you can depend on. Like, we don't want our clients dependent upon that distribution rate as an income stream at that point in time, because it can be decreased or it can be stopped. So we really look at this as a long-term investment, Scott.
So if you go to the kind of the top of the pyramid here and discuss this generally, a real estate investment trust falls under the header of an alternative investment. And there are many types of alternative investments, but real estate as an asset class has historically outpaced inflation just like stocks. So the appeal should be there for a long-term holding in real estate as an asset class.